Hello viewers, welcome to my channel. I'm Hasham. So right now we are doing the problem on current cost adjustment. That means in accounting for price level changes, two methods are there: CPP method and Cca method, current cost accounting method. So already 25 problems we have done on CPP method in the earlier videos. Now already 9 problems we have completed on Cca method, current cost accounting method. So hope you have already watched the earlier videos, got the conceptual clarity regarding accounting for price level changes. So if you join right now, it will not be helpful to you. You may not be able to understand. So my suggestion, if you want the complete grasp on this topic of accounting for price level changes, watch the initial videos. First introduction part, then starting videos. If you have watched, then definitely you can be able to know what are the different methods are available for accounting for price level changes. So in CCA, current cost accounting, 4 types of adjustments are there. The first adjustment, depreciation adjustment, we have done starting 4-5 problems. Then next one, COSA, cost of sales adjustment, nearly 5 problems we have done. Third one, net monetary working capital adjustment, already we have done in the previous videos. Lastly, gearing adjustment, which we are going to do now. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject Advanced Corporate Accounting. In that, select the videos of accounting for price level changes. Watch the initial videos, then you come to this video. Definitely you can get complete grasp on the topic. Now, before starting the 10th problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. So before watching the solution of these problems, have a hard copy of the problems. Now, 10th problem I am reading out. The following were the balances of debtors and creditors of Aruna Limited at the beginning and close of the accounting year 1989. Debtors, creditors. Actually, debtors means account receivable and creditors means accounts payable. So we have different concepts used for this term. So total data, trade debtors opening 90,000, closing 1 lakh, and trade creditors opening 50,000, closing 40,000. Now the average age of these items is 2 months. So 2 months period is there for debtors as well as for creditors. The index numbers applicable are mid-month 1988 November 240, mid-month 1988 December 250. And mid-month 1989 November 280, mid-month 1989 December 290. That means we are given the data for November December of 1988 and November December of 1989. So current year is 1989, last year was 1988. So first of all, we will take the average of the 2 months. November, December, 2 index numbers are given for November and December. So we take the average of last year and average of current year. So whatever is the average of last year, that is applicable to opening, and average of current year, that will be applicable to closing, right? That's all. You are required to calculate MWCA, monetary working capital adjustment. That's what we are finding. Now see here, index number applicable to opening monetary working capital. MWC means monetary working capital. So opening means 1988. 1988 we are given 2 numbers, 2 index numbers, November and December. November is 240, December is 250. This is November 1988, this is December 1988. We calculate the average, 240 plus 250 by 2, 245. This is the average last year, beginning. Now current year, index number applicable to closing monetary working capital required. Closing means current year 1989. 1989 November it is 280, December it is 290. Take the average, 285. So this 245 we will apply for opening and 285 we apply for closing. Now if you want to find out the average, take the average of these 2, opening and closing. Average index number for the year 245 plus 285 divided by 2, 265. Now 3 index number we are having. Opening index 245, closing index 285, average index 265. And already we know the formula for MWCA, monetary working capital adjustment. C minus O minus IA, C by IC minus O by IO. Already in the previous video, previous problem, I explained you the formula. C stands for closing monetary working capital. Closing monetary working capital. Working capital means debtors minus creditors. Working capital means current asset minus current liability. Right? So closing, C stands for closing monetary working capital. O stands for opening monetary working capital. Then IA, index number average index number 265. C stands for closing working capital. IC, index number for closing index number is 285. O stands for opening monetary working capital. IO stands for index number opening is here. So here I have explained you. C stands for closing monetary working capital. Working capital, debtors minus creditors. So closing debtors 1 lakh, closing creditors 40,000 given in the problem. 60,000 is the monetary working capital. Closing. This is C. Then O, opening monetary working capital. Again debtors minus creditors. Opening debtors 90,000, opening creditors 50,000. So 40,000 is the monetary working capital opening. Now IA average 265, IC closing 285, IO 245. All the values we have to substitute the values in the formula. MWCA is equal to C 60,000. Here we have written C is 60,000, O is 40,000 minus IA is average index. So average index is 265. Then 60,000 divided by 285. So this is IO. We substitute 60,000 divided by 285, 40,000 divided by 245. So 20,000 minus 265 into 60,000 by 285, 210.526, and 40,000 divided by 245, 163.26. First you subtract it, you will get 47.261. So multiply 47.261 into 265, 12,524. 20,000 minus 12,524, MWCA 7,476. This is the net monetary working capital adjustment. That's all. So this is the 10th problem. Now see the 11th problem. From the following information, calculate the amount of gearing adjustment. First time we are calculating gearing adjustment. So far we have done depreciation adjustment, cost of sales adjustment, and MWCA monetary working capital adjustment. Now we are coming to the last point, gearing adjustment. So from the following information, calculate the amount of gearing adjustment in case of a company which has a capital mix of 40% debt and 60% equity. So debt equity ratio 40:60. So company is having two long-term funds, debt and equity. 40% debt, 60% equity. Then depreciation adjustment is 10,000. COSA, cost of sales adjustment 5,000. MWCA, monetary working capital adjustment 5,000. So total adjustment, current cost adjustment. Total current cost adjustment of 20,000. That's all. So gearing adjustment, the formula is this one. Gearing adjustment. So total of current cost adjustment. So in the problem we are given three adjustment: depreciation adjustment, COSA and MWCA. So add up the three adjustment, 10,000 plus 5,000 plus 5,000. This is the total current cost adjustment, 20,000 into. What is the percentage of debt? Debt is 40%. So 40% of total current cost adjustment is the gearing adjustment. Finished. So total current cost adjustment 20,000 and the proportion of debt 40%. So 40% of 20,000, 8,000. 8,000 is the gearing adjustment. That's it. Over. Now come to 12th problem. Problem number 12. Following data relate to Bearing Limited. Opening, closing. Net long-term borrowings 25,000 opening, 28,000 closing. Creditors 15,000 opening, 5,000 closing. Next page. Bank overdraft 6,000 opening and 10,600 closing. Taxation 2,000 opening, 2,000 closing. And cash minus. Because current liabilities, we have taken all monetary liabilities minus monetary assets. We'll get net working capital. So here minus cash 9,000, subtract monetary asset. The monetary asset is only one, cash. Remaining all monetary liabilities, that bank overdraft, taxation, creditors and net long-term borrowings, all these are the monetary liabilities. So from monetary liabilities, subtract the monetary asset cash, 9,000. So 39,000 opening and closing, it is 30,800. Then B point, share capital and reserves from the current cost balance sheet, 74,000 and 94,000. Proposed dividend is 1,160 and 1,312. If you add up these two, 75,160 is the shareholders' interest opening. So opening shareholders' interest is 75,160 and closing shareholders' interest is 95,312. Now current cost adjustment. So here 4 adjustments are given. Depreciation adjustment 3,400, fixed asset disposal 3,600, monetary working capital adjustment 2,240, cost of sales adjustment 3,240. Take the total, 12,480 is the current cost adjustment. Now what it is asking you, compute gearing adjustment ratio. First of all, you have to find out the gearing adjustment ratio. Secondly, current cost adjustment after abating gearing adjustment. After abating gearing adjustment, how much is the current cost adjustment? These two items we have to find out in this problem. The first time we are going to calculate the gearing ratio. See carefully here. Calculation. Calculation of gearing ratio. Adjustment, gearing adjustment ratio. So first of all, opening, closing, net borrowings as given. So in the problem you can see the total net borrowings. Net borrowings, that means after deducting cash. After deducting cash, the net borrowings are 39,000 opening and 30,800 closing, given in the problem. To this you add total shareholders interest. I told you just now, total shareholder interest includes share capital reserves and proposed dividend. And proposed dividend, if you add up, that will be shareholders interest. Shareholders interest is this one. Add up. So net borrowings, add shareholders interest. The figure will be called net operating assets. So what do you mean by net operating assets? The total of net borrowings plus shareholders interest. Shareholders interest. If you add up these two, net operating assets are 1,14,160 opening and 1,26,112 closing. Now gearing adjustment ratio. Now concentrate here. First time we are applying a formula to calculate gearing adjustment ratio. Average net borrowings divided by average net operating assets into 100. Average means opening plus closing divided by 2. That is average. So here numerator, average net borrowings. So what is the borrowings here? Net borrowing as given 39,000 plus 30,800 divided by 2. Opening borrowings 39,000, closing balance borrowing 30,800. You add up these two. So 39,000 plus 30,800 divided by 2. You are getting 34,900. What is this? Average net borrowings. Denominator, average net operating assets. So operating assets are 1,14,160 opening, 1,26,112 closing. Add up these two, divide by 2. Add up these two, divide by 2. So average net operating assets 1,20,136. So average net borrowings divided by average net operating asset into 100. So 29.05. This is the gearing adjustment ratio. First time we are applying. Remember this formula. The numerator we want net average borrowings. Denominator we want net operating assets. Average of net operating assets into 100. So we got 29.05% is the gearing adjustment ratio. First question completed. Second question, second bit, it is asking you calculation of current cost adjustment after abating gearing adjustment. After giving the gearing adjustment, how much is the current cost adjustment relating to shareholders? Because current cost adjustment should be borne by two. By borrowings and also by the shareholders. So total current cost adjustment as given 12,480. It is given in the problem last line. The total of all adjustment, depreciation adjustment, Cca and Mwca, all the total of current cost adjustment 12,480. From this we deduct gearing adjustment. Gearing adjustment, how much percentage we got? 29.05% is gearing, means relating to borrowed funds. Gearing means relating to borrowed funds. So out of this 12,480, so 29.05% of 12,480, 3625. Deduct, you will get 8855. This is the current cost adjustment relating to shareholders. Relating to shareholders. So current cost adjustment attributable to shareholders. So out of the total 12,480 total current cost adjustment, 3,625 should be borne by borrowings, related to borrowings, and 8,855 related to shareholders. So this is the problem. Problem number 12. First, you have calculated the ratio, gearing adjustment ratio. Secondly, how much current cost adjustment relating to, after abating gearing adjustment, relating to shareholders. That's it. Now, 13th problem. The 13th problem is exactly similar to the 12th problem. Following data relate to gearing limited, beginning of the year, end of the year. Net borrowing, net long-term borrowings, 14,000, 14,000. Creditors, 4,000, 2,800. Bank overdraft, 5,000, 5,600. Taxation, 1,500, 1,400. Minus cash. So out of the total monetary liabilities, we are deducting monetary asset. Monetary asset, it is cash. So minus cash 5,000 for 8,400. So net borrowings. The net borrowings comes to 19,500 opening and 15,400 closing. So net borrowings we got. Then share capital and reserves from current cost balance sheet 37,080, 47,056. Proposed dividend 500, 600. Total shareholder interest 37,580, 47,656. Now remember, the net borrowing plus shareholders interest, you will get net operating assets. So net operating assets is the sum of net borrowings and shareholders interest. Then current cost adjustment, depreciation adjustment, fixed asset disposal adjustment, cost of sales adjustment, monetary working capital adjustment. The total current cost adjustment are 6,240. Find out gearing adjustment ratio and current cost adjustment after abating gearing adjustment. Exactly similar to the previous problem, only figures are different. The complete structure of the problem is same. The solution will also be same. The calculation of gearing adjustment ratio. Beginning of the year, end of the year. Net borrowings. Net borrowings are given in the problem after deducting cash. Net borrowings are 19,500, 15,400 given. Then shareholders interest, that is also given in the problem, 37,580, 47,656. Add up both, we'll get net operating asset. So net operating assets are 57,080, 63,056. Now we calculate gearing adjustment ratio. Just now I told you the formula you have to remember. Average net borrowings divided by average net operating assets into 100. Average means opening plus closing divided by 2. So here average net borrowings. How much are the net borrowings beginning? 19,500 plus 15,400 divided by 2. See here, 19,500 plus 15,400 divided by 2. 17,450 is the average net borrowings. Denominator average net operating assets. Add up. 57,080 plus 63,056 divided by 2. You will get 60,068. Simply divide it. 17,450 divided by 60,068 into 100. 29.05 is the gearing adjustment ratio. Half of the problem completed. Now, calculation of current cost adjustment after abating gearing adjustment. After gearing adjustment, how much is the current cost adjustment remaining for shareholders? Now, total current cost adjustment as given 6,240. This is the total current cost adjustment minus gearing adjustment. So 29.05% of 6,240. Total current cost adjustment ka 29.05% relating to gearing. So 1813. Deduct 1813. 4427. So 4427 is the current cost adjustment relating to shareholders, or current cost reserve after abating adjustment, after abating gearing adjustment. This is the answer, 4427. That's it. This is the end of 13th problem. Now see the 14th one. The current cost balance sheet of Messrs Mwca Limited contained the following figures. So here, cash and bank balances 1,80,000 not included in monetary working capital. Then current liabilities, creditors 68,000, taxation 84,000, proposed dividend. This proposed dividend will be added to share capital to get shareholders' interest. Then bank overdraft, it's a liability not included in monetary working capital. Net assets employed. Shareholders fund 10,52,000. The shareholders fund plus proposed dividend will get shareholders interest. Long-term loans, debentures 2,16,000. Deferred liabilities, deferred taxation 1,28,000. Calculate the current cost gearing proportion. Current cost gearing proportion means gearing adjustment ratio. Gearing adjustment ratio, same problem, formula what we have applied in the previous problem. The current cost adjustment are as under: depreciation 3,48,000, fixed asset disposal 32,000, cost of sales 4,20,000, monetary working capital 1,28,000. These are the current cost adjustments. Calculate the current cost gearing adjustment. Similar to the previous problem, but the only thing is here there is no need to calculate average. Previous problem, opening and closing were given, we have calculated average. Here no need to calculate the average. See here, net borrowings. Net borrowings means we take all borrowings minus cash and bank balance. All the different borrowings. The borrowings are debentures plus creditors plus taxation plus deferred taxation plus bank overdraft minus bank and cash balance. We take all borrowings. All the liabilities. What are the liabilities here? Debenture is a liability, creditor, taxation, deferred taxation, bank overdraft. These are the liabilities given. Minus asset, cash and bank balance. So all the values are given. Debentures are 2,16,000, creditors are 68,000, taxation 84,000, deferred taxation 1,28,000, bank overdraft 76,000, and minus bank and cash balance 1,80,000 given in the problem. So 3,92,000 is the net borrowings. Net borrowings. Shareholders fund. I told you share capital plus proposed dividend. So shareholders fund plus proposed dividend 10,72 plus 1 lakh 11,72,000. Net operating result. Net operating assets. We can call it as asset or result. So net operating assets is equal to net borrowing plus shareholders interest. Net borrowing how much? 3,92,000. Shareholders interest 11,72,000. Add up both, 15,64,000 is the net operating result or net operating assets. Now easily we can find out the ratio, proportion, gearing ratio. So gearing ratio, net borrowings divided by net operating assets into 100. Net borrowings 3,92,000. Net operating assets 15,64,000 into 125. What is the difference between previous problem and this problem? Here we have taken the average of net borrowings. Because we are given opening and closing, that's why we have taken average. Here opening closing are not given, only current year's net borrowings are given. So we have taken the current year's net borrowings, current year's net operating assets into 100. 25.06 is the gearing ratio. Now gearing adjustment. So total current cost adjustment into gearing ratio. Total current cost adjustment. The 4 adjustments are given in the problem. Those are depreciation 3,48,000. 3,48,000. Fixed asset disposal 32,000. Then cost of sales 4,20,000. I have taken 4,20,000. Monetary working capital 1,28,000. So add up all these 4, you get 9,28,000 is the total current cost adjustment. Total current cost adjustment. To this you multiply the gearing ratio. How much is the gearing ratio? 25.06% into 25.06%, 2,32,557. This is the gearing adjustment. That's it. So we have completed 14th problem. Come on, now we'll start the last and final problem on this topic of accounting for price level changes. Cca method. 15th problem is the last problem on this. Now see the problem carefully. The summarized profit and loss account of Kohinoor Diamonds Limited for 1990 prepared under historical cost convention was as follows. The historical income statement is given for the year ended 31st December 1990. Now turnover, sales are 3,60,000, less opening stock 36,000, purchase 2 lakh, closing stock 52,000. The gross profit is given 1,76,000, less depreciation 20,000, other operating cost 1,27,000. So we got operating profit 29,000, less interest payable 5,000, profit before taxation 24,000, less taxation 10,000. So profit after tax 14,000, less dividend paid 7,000. The retained profit for the year 7,000. This is the complete income statement given for the year 1990 according to historical cost statement. The following additional information is provided. Relevant indices for stocks are as follows. The index numbers are given for stock. That means we have to find out cost of sales adjustment, COSA. For calculating COSA, we are given the indices. The average of October-December 1989, actually 1989 means last year, our current year is 1990. So here October to December 1989 index number was 120. At 31st December 1989 in a last year end, the last year closing will become current year's opening index. The last year's closing index was 124. An average of 1990, current year is 1990. So 1990 average 135. An average for October-December 1990, current year average index of October to December 140. And 31st December 1990, current year end index is 143. So all the index numbers are given. On average, the company holds stock for 3 months. That's why index number are given for October to December. October to December 3 months, October, November, December. So stock is held during this 3-month period. Then second point, all the company's fixed assets were purchased when the company was incorporated in January 1984. Their original cost was 2 lakh and they are being depreciated over 10-year period assuming nil residual value. So all the fixed assets are purchased for 2 lakh rupees on January 1st, 1984 and the life of the asset was 10 years. So straight line method depreciation. So 2 lakh divided by 10, 20,000 rupees is the annual depreciation according to straight line method as per HCA, historical cost accounting. There is no change in the estimated life of the asset. The following current cost valuation are provided. The current cost value of the asset beginning of the year, 1st January 1990, 3,10,000 and 31st December 1990, 3,50,000. These are the current cost of the fixed assets. That means we have to find out the depreciation adjustment. So in this problem, first of all, we need COSA, cost of sales adjustment. Secondly, depreciation adjustment. Net borrowings were approximately 1/3 of net operating assets throughout 1990. So net borrowings, the net borrowings in the company is 1/3 of the net operating assets. And required a summary profit and loss account for 1990 on CCA basis. The problem in the problem, income statement is given according to HCA, but we have to make the income statement according to CCA method. So far as the information permits, ignore monetary working capital adjustment. Specifically given, ignore the monetary working capital adjustment. Only 2 adjustment we have to find out. COSA, cost of sales adjustment, and depreciation adjustment. See here carefully. First of all, COSA. The formula for COSA, C minus O minus IA, C by IC, O by IO. Already in the last so many problems we have applied. C stands for closing stock. In the problem, closing stock is given 52,000. Historical cost. Historical closing stock. Opening stock 36,000 given in the problem. This is also historical. Average index 135, that is given in the last line. The average index for 1990 is 135 given. Then I see average index of closing stock. Closing stock we take the average of October to December 1990, current year end October December 1990, index number 140. IO, average index of opening stock. The opening stock we have taken October to December 1989. Last year's closing stock, current year's opening stock. So opening stock we take 1989. 1989 October to December opening stock. That is the index 120. Now we got all the values CO, IA, IC, IO. Substitute all these values in the Cca formula. C 52,000, O 36,000, IA 135, C 52,000 divided by 140, O 36,000 divided by 120. Simplify, you will get Cca 6357. We got one adjustment, cost of sales adjustment 6357. Actually 6,357.139. So equivalent to, this symbol is equivalent to 6357. One adjustment we got. Now depreciation adjustment, second adjustment. Average replacement value of fixed asset. Replacement value is given at the beginning of the year. The current cost value of fixed asset are 3,10,000. At the end of the year, the current cost fixed asset value is 3,50,000. The average replacement cost is 3,30,000. Average replacement cost of fixed asset 3,30,000. Now we can calculate depreciation as per Cca, current cost adjustment. So what is the average replacement cost? 3,30,000. What is the life of the asset? 10 years. 10 years. So 3,30,000 divided by 10. That comes to 33,000. So 33,000 is the depreciation as per Cca. Depreciation as per Hca, historical. The historical cost of the fixed asset was 2 lakh. 2 lakh rupees given in the problem. Divided by 10, 20,000. So 20,000 is the depreciation as per Hca. Now deduct 33 minus 20, 13,000 rupees is the depreciation adjustment. Only two adjustments we have to calculate, Cca and depreciation adjustment. Now gearing adjustment. In the problem it is given 1/3 of the net operating assets are net borrowings. The net borrowings are 1/3 of net operating assets. Net borrowings are 1/3 of net borrowing assets. So total current cost adjustment. So two current cost adjustment we have, Cca and depreciation adjustment. Take the total 6,357 plus 13,000. This is Cca and this is depreciation. The total adjustment, current cost adjustment are 19,357. In this 19,357, 1/3 are gearing adjustment. Because in the problem it is given 1/3 are gearing. The 1/3 of 19,357, 6,452 is the gearing adjustment. So three adjustment we have completed. This is Cca, depreciation and gearing adjustment. Finally, it is asking you to make the income statement as per Cca method. So Kohinoor Diamonds Limited income statement for the year ended 31st December 1990, Cca method. Operating profit as per Hca. In the problem you can see the operating profit as per Hca. In the problem it is given 29,000, you can see operating profit. Operating profit 29,000 as per historical cost accounting. Now to this 29,000 we will adjust all the adjustment. Less current cost adjustment Cca 6,357, depreciation adjustment 13,000. So total 19,357 is the adjustment, two adjustment. That is Cca and depreciation. Add up 29,000 minus 19,357, 9,643 is the profit available. To this we add gearing adjustment. Remember, gearing adjustment should be added, whereas this depreciation and Cca should be deducted. So gearing adjustment we have to add. How much gearing adjustment? 6,452. 6,452 gearing adjustment. But from gearing adjustment we have to deduct the interest payable. It is given in the problem. Interest payable. So deduct interest payable from gearing adjustment. 1,452 outer column. Add up. 9,643 plus 1,452, 11,095. This is the profit before taxation. Now deduct taxation, 10,000 rupees tax given in the problem. Deduct. 1,095 is the current cost profit after tax. Current cost profit after tax. From this, dividend paid. 7,000 rupees dividend paid. So 1,095 minus 7,000, you are getting negative figure. You are not getting positive. You are getting negative. 1,095 is the profit and dividend paid 7,000. So 1,095 minus 7,000, you will get minus 5,905. Minus 5905 means a reduction in retained profit. Reduction in current cost retained earnings. Current cost retained earnings has been reduced as per current cost accounting, CCA method. So CCA method, the retained earnings has been reduced by 5,905. That's all. This is the income statement according to CCA. This is the end of the topic, accounting for price level changes. So I have explained you in detail the first introduction part. Then two methods are there, CPP method, CCA method. 25 problems I have solved on CPP method and 15 problems we have solved on CCA method. So watch these problems from beginning till end to get the complete command. In the first attempt, you may not be able to understand some points. Rewind the video second, third time. If you listen, if you watch with full concentration, you can get the good grasp on this topic of accounting for price level changes. So in this whole subject of advanced corporate accounting, 3 topics I have completed. The first, holding companies, second, electricity companies, and thirdly, accounting for price level changes. One more topic is there, lease accounting. That we'll do it in the next video. So if you are satisfied with my lecture, please give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video, can get the confidence on the subjects. And give your comments on these lectures. And lastly, don't forget to subscribe my channel. We'll continue the next topic in the next video. Till then, take care of yourself.